But being overbought by itself doesn't necessarily guarantee that anything happens. Notice how we're in the overbought zone here, but price is still drifting higher. So it's not, unfortunately, it's just not that simple. You could have put some moving averages. And since this is a daily chart, I'll go ahead and put the 50 and the 200. So there's your 50. And this will be your 200. So clearly you do not want to be a seller this entire time. And why is that? Well, price is above the 200-day EMA. That's your longer term indicator. Doesn't necessarily mean you want to be a buyer. You just don't want to be a seller. Now that we are clearly above there, and ironically, we got in this overbought condition, we pulled back a little bit, and once we were out of that overbought condition, then you can start to think about buying, especially as we drifted closer to the 50-day EMA. So what would have made you think about that? Well, the fact that we were breaking 20,000, it's a large psychologically significant figure that would attract a certain amount of attention. Plus, many, many, many moons ago, that was a high back there. So now that we have broken above there, even though we're overbought, we're actually drifting lower as far as that's concerned. Let's go ahead and type in volume. And as you get this breakout, the volume spiked. So that's good. That's exactly what you want to see. And much like price action, the price on a chart, you can see that swing high, swing low, swing high, swing low, swing high, swing low. So that's when you want to be out. Now, again, doesn't necessarily mean you want to be a seller. What it means is you don't want to be buying right at this juncture. We pulled back here to this 50-day EMA, which is supportive, and we are not overbought or oversold. So it is somewhat interesting. Volume spike. So it's time to think about going long again. Let me go ahead and get rid of this, and let me put in the MACD. Big, massive spike in volume, negative cross on the MACD. We are just now starting to get that buy signal at a much more reasonable rate than being completely overbought up here. We're getting it right here just above the 50-day EMA. The volume spike was right before it. That all kind of lines up quite nicely. Go ahead and go to the 30-minute chart for those of you looking to day trade. Let's do the RSI. You can see that we peaked a little bit here, kept peaking here. Notice though, this is that divergence that I had been talking about previously. That was a sign that maybe we were going to find some trouble, but there should be support right in this area. So now we're kind of trying to figure that out. Definitely worth paying attention to. Do we have volume that tells us anything? So notice here, volume spiked after an overbought condition that it tells you to watch it, but you started to get that divergence, and volume it spiked, but not as much as last time. Spiked not as much as last time there as well. So that tells you that perhaps it's a scenario where not all things are as they appear. Let's go ahead and take a look at the 4-hour chart. Overbought condition, massive volume. Is it going to run out of steam? It does. Not necessarily a selling condition, but it is something to be aware of if you are already long at Bitcoin. So as we slide over to Ethereum, Let's do volume first. Massive volume breakout. That's exactly what you want to see. Now the question is, does it have enough momentum to continue going higher? Well, it did pull back. So let's see what our RSI said. And exactly right there, we are overbought. As we got here, we started to drop. That shows you that you are running out of momentum. But once you get out of the overbought condition, then it's possible for the market to think, okay, fine. We're not overbought anymore. It might be safe to get back in. $1,000. Nice psychologically important number there. You know, it just attracts a lot of headline attention, if you will. Let's see what the 50 looks like here. And you can see the 50 is coming up to meet it, and that should be dynamic support. Let's go ahead and take a look behind the previous times. I'm going to go ahead and put another moving average. And this time I'm going to make it 200. There's a cross there. Volume didn't spike up, but we weren't overbought either, so it was a safe trade to take in that sense. You didn't have to worry about, are we overbought? Is this going to hurt? Let's go ahead and put the MACD on. And as you put the MACD on, you can see that we crossed here right around the zero line and then picked up again. And we were walking right along the 50-day EMA. Had a quick run up. And you started to see we were getting a little overbought. And once you broke down below this low here, it was time to get out. You did lose the very last part of the move. But it is better to be out of the trade a little too early than a little too late. That's part of what indicators are supposed to do. They're supposed to give you a little bit of a heads up. Overbought condition breaks through the 50-day EMA. You could very well suspect that we're going to go looking towards that 200-day moving average. Not EMA, but moving average. SMA, simple moving average. You can see that down here we started to get a little oversold. Shortly afterwards, we got a bullish cross. Volume was very quiet, so we kind of just drifted. And then a volume peaked here in an overbought condition. And you can see that this was a lot of noise. Well, here's the question. Why was it noise? Well, remember that when it comes to these moving averages and these oscillators, they tend to need some type of trend. And we just kind of lost steam there. We just kind of went sideways. The market was just trying to figure itself out. This is a trend. And you can see that's a cross. We were slightly overbought, came back just a little bit. And then before we took off, we weren't overbought. And once we broke that 200-day EMA, a lot of longer-term traders will look at that as a bullish sign. So there's a lot going on at any time, and you need to be aware of the fact that some things will contradict other things. And that's part of the challenge. That's why you don't want 12 different indicators on your chart. You want to be able to take a trade based upon what the market's telling you in a somewhat clear and concise manner. So, for example, 140 here had been resistance. We broke above it on decent volume, and we continued to go higher. If you throw the MACD in there, you can see that we broke out here. We broke above that zero line shortly thereafter. It did lag a little bit. That's not that uncommon. Volume is immediate. Most indicators are lags, so you do have to keep that in mind. Notice how we went right up to the 50-day EMA and then pulled back before we broke through it again. So this offers a little bit of dynamic resistance, but when we pulled back, we had this cross and decent volume as we broke through again. Once we finally broke through, you could even go so far as to, let me go ahead and change this to 200. But you could even, as we broke through, you could say, there's the 200-day EMA, and this level here, right around 175, was resistance. So we had nice volume going into it, and a pickup in volume, and the 200-day EMA, the previous resistance is now support, offering support. 50-day EMA comes in here. It's a nice buying opportunity based upon the candlestick pattern called a hammer that we'll talk about later. And then 50-day EMA continues to go higher. So really, at the end of the day, what you need to be aware of is no matter how perfect the setup is, sometimes they don't work. But if you have a handful of reasons to be in a trade, more often than not, you will make money. And at the end of the day, making money is about psychology. It's about trusting in your system. So you need to test all of this out. But it is also about risk management. And that's the next video.